In this video, I'll talk about how a lot of analysts are trying to spread FUD for Dogecoin and the crypto market. Personally, I believe that it's far from over for the crypto market and that we can recover very soon. But still, we need to look at some negative comments from experts that came out today. Basically, there are some people that are just too adamant about spreading FUD in the market. Billy Marcus, who created Dogecoin with Jackson Palmer back in 2013, said that he expects the crypto market to be okay eventually, except he thinks it'll take it 4 years to rebound. Now, I think it's an overstatement and it's really up to you who you want to listen to. Alejandro Zelaya, the Minister of Finance of El Salvador, said, "There is a clear criticism of Bitcoin as such, not of El Salvador's strategy. El Salvador is what interests them the least. The media outlet are not interested in what happens to our economy. They are not interested in what happens with our people, what happens with inflation." Also, Michael Saylor isn't panicky either, even after losing nearly $1 billion at the current price of Bitcoin. Even though his shares price plummeted after the crash, he's still very bullish. On Twitter, he said, "When MicroStrategy adopted a Bitcoin strategy, it anticipated volatility and structured its balance sheet so that it could continue to hold through adversity." He then also said, "We started with $5 billion of unpledged collateral. We borrowed $200 million against it, so that's a loan-to-value ratio of 4%. If Bitcoin fell 95% from that number, we'd have to post additional collateral." Also, even in the middle of this huge crash, there's some really good news for Dogecoin. According to data shared by WhaleStats, Dogecoin has returned to the list of coins that BSC whales are after. WhaleStats has shared that Dogecoin wrapped on BNB chain has again emerged on the top 10 list of the most purchased BSC-based tokens over the past 24 hours. Also, there are some experts who are still very optimistic. IDX Digital Assets CIO Ben McMillan reacted to the crypto crash, saying he believes cryptocurrency will be a stronger ecosystem when the market corrects itself. He also said, "We're seeing a lot of the low-quality projects are going to zero. Investors are being more discerning with their capital. And so I think part of it is, we've had a macro overhang this whole year which can't be ignored. That's weighed down all risk assets. I think investors need to see clarity in terms of inflation and terms and see what the Fed does, whether or not we go into recession. But risk beta will eventually come back into the market, and I think crypto will be a stronger ecosystem when it does." Now coming back to some bad news, take a look at this. Gary Gensler, the head at SEC, has testified in Congress, explicitly stating that only Bitcoin is not security, and all pre-mined ICO coins are securities and should register and provide full disclosure to investors. Statements like these further undermine the credibility of cryptos, which is really bad news. Coming back to analysts, Raoul Pal also seemed very bullish. He said, "But can things get worse?" Absolutely. But for my investment framework, we are in the buy zone, right near the 2 standard deviations logarithmic regression channel. With the weekly RSI at 31 and the lowest ever at 28, that 2 suggests the low is within striking distance. To mark weekly charts suggest low is next week or in next 5 weeks. Can all of these fail? Sure. Can crypto trade sideways for a year or 2? Sure, but we are in the probability game, not the certainty game. I am comfortable with the odds and it plays exactly into my framework, just as it did in March 2020. I am getting ready to add to my crypto position significantly, probably starting next week and into July. So as you can see, one of the most prolific analysts in the world is also very bullish on crypto. But still, we need to remember that Bitcoin has dropped below 25K for the first time in 18 months, cementing the markets firmly in a crypto winter. We're talking about Bitcoin because it has influenced the entire crypto market, and especially Dogecoin. Also, the dip in prices sees the market capitalization fall below $1 trillion from previous highs of $3 trillion. Stephen McClurg, co-founder at Valkyrie Investments, said, "The fundamentals to support stabilization and recovery just aren't there. Things can and likely will get worse before they get better. If you do get long, perhaps think about doing so with either a long call spread or short put spread to limit risk," advised Rick Bensinger of Bensinger Investment Strategies. He warned that if this dives, there's no reliable support nearby. Talking about data, companies with Bitcoin on their balance sheets felt the heat as well. MicroStrategy, with well over 120,000 Bitcoin in its holdings, saw its shares decline by 28%, while mining firms like Marathon Digital Holdings Inc. and Riot Blockchain Inc. plunged by 19% and 16%. After the crash, to spread the FUD, Peter Schiff said, "This could be a rough weekend for crypto. Bitcoin looks poised to crash to 20K and Ethereum to 1K. If so, the entire market cap of nearly 20K digital tokens would sink below 800 billion from nearly 3 trillion at its peak. Do not buy this dip, you'll lose a lot more money." But then Robert Kiyosaki, who's way more trusted in the industry, said, "Crashes are the best times to get rich." In a tweet he said, "Great news. As stated in previous tweets, I am waiting for Bitcoin to crash to 20K. We'll then wait for test of bottom, which might be 17K. Once I know the bottom is in, I back up the truck. Crashes are the best times to get rich. Take care." Now let's take a look at some good news from today. So, a new report has confirmed that criminal behavior keeps dropping as a percentage of overall crypto activity. The findings were detailed in an annual report by the American blockchain analytics firm CipherTrace, which was bought up last year by the payments giant MasterCard. Although the new report found that the total dollar value of illicit cryptocurrency activity grew in 2021 to a much larger sum, its authors claimed that it is important to note that it continues to decline as a percentage of overall activity. The company also wrote, "We estimate the total percent for 2021 illicit activity was between 0.10% and 0.15% of overall cryptocurrency activity. This is very low, compared to between 0.62% and 0.65% of overall crypto activity in 2020. Now coming back to data, institutional investors pulled out approximately $102 million last week from digital asset investment products. The outflows were mainly focused on Bitcoin, as nearly $57 million worth of investment has left Bitcoin products. In its weekly report, CoinShares said, "Digital asset investment products flows remain choppy in anticipation of hawkish monetary policy, with steady daily outflows last week totaling $102 million. What has pushed Bitcoin into a crypto winter over the last 6 months can by and large be explained as a direct result of increasingly hawkish rhetoric from the U.S. Federal Reserve. Regionally, the majority of outflows were focused on the Americas, totaling $98 million, with Europe seeing just $2 million outflows. Bitcoin saw outflows totaling $57 million last week, bringing month-to-date outflows to $91 million. The report also said, aside from multi-asset investments products, which saw $4.7 million of outflows last week, investors steered clear of adding to altcoin positions. Blockchain equities have not escaped the negative sentiment, with outflows of $5 million last week. Total assets under management have fallen 54% from its November 2021 peak to $1.9 billion. Now coming back to analysis, Morgan Stanley said that ETH underperformance echoes crypto downturn of 2018. They published a note that said, "When the ETH Bytossen relative cross falls, it is a sign that the broader crypto enthusiasm is waning as money is being pulled out of the more volatile alternative coins." Another thing to note here is that although ETH's price cycle in US dollar terms is similar to 2018, the analysts noted that this time round it's largely institutional investors driving sales. In 2018, the share of retail trading activity was much higher. Also, the crypto equivalent of quantitative tightening has continued, fueling Bitcoin's slide to below 28K. Any investors who bought Bitcoin in the last year are now at a loss, and there are no obvious technical levels to watch until about 19.5K, which is the 2017 high. That being said, another really bullish prediction came from someone in the US government. The ex-White House chief has predicted that Bitcoin will hit 100K in 12 months. Also, he said that he believes cryptos will rebound from the carnage if market players stay prudent, despite the fact that typical pessimistic sentiment currently dominates cryptocurrency and general market headlines. The head of SkyBridge also compared the current sell-off to the meltdown of Web 1 firms in 2000, when practically all internet company stocks plummeted. He also advised investors to maintain discipline. Now coming back to Dogecoin, its price currently stands at 5.4 cents, and it's fallen even more in the last 24 hours. It's a shame because Elon Musk still hasn't said anything about Dogecoin since the big crash. I really do hope that he'll come back with some good news for Doge very soon.